Welcome to the Pirls Stock Market Commentary video, your weekly window on stock market technical conditions featuring the proprietary bull-bear point and figure market breadth summary chart for December 24th, 2017. Market breadth. With this past week's market advance, our bull-bear point and figure ratio at 1.69 rose from 1.32 last week, advancing within bullish territory. The total count of securities in bullish or bearish patterns increased 3% to 3,205. The count of bearish stocks decreased 12%, while the count of stocks in bullish patterns increased 14%. The Pirls P&F Market Breadth Summary Chart shows us a market now 17 weeks in bullish territory. Paid subscribers have access to the Open Office Calc data from which the chart is generated. You may become a paid subscriber by visiting s2pmarketsignal.com, clicking Membership, clicking Register, and following the prompts. To subscribe to the weekly Pirls Stock Market Commentary via email free of charge, simply enter your name and your email address in the spaces provided and click Subscribe. The well-known market breadth indicator, the Nasdaq McClellan Summation Index, rose 32 points for the third advance in 10 weeks. At a positive 120.60 points, it continues below all 7 tops in the last 30 months and continues above all 5 bottoms in the last 30 months. Volume analysis. In this week's volume analysis, the Nasdaq Composite Index ended in neither accumulation nor distribution mode, with average daily volume lower than the prior week. In the last 2 weeks, the Nasdaq had 2 accumulation days and 2 distribution days. Accumulation days are counted when the index closes up on higher volume than the prior market day, while distribution days occur when the index closes down on volume higher than the prior market day. Last week, the Nasdaq ended in accumulation mode on lower average daily volume. Momentum. The CCI 20 daily in a Woody's uptrend is now at a positive 9.10, down from a positive 136.85 last week. At Wednesday, 12/6 close, the CCI 20 daily was within the plus or minus 50 range for a zero-line reject pivot and long entry signal at Thursday, 12/7 open. At Friday, 12/22 close, the CCI 20 fell below plus 100 to signal our exit from the trade at Tuesday, 12/26 open. We will report the results of this trade simulation in next week's commentary. In Woody's CCI trading system, 6 consecutive bars above or below 0 are required for a change of trend. The weekly CCI 20 of the Nasdaq Composite Index began a Woody's uptrend 86 weeks ago, while the daily CCI 20 began a Woody's uptrend 15 weeks ago. The CCI 20 weekly, at a positive 129.92, is up from a positive 123.887 last week, after forming a zero-line reject long entry signal for Tuesday, 9/5 open. Our rule is to stay in the trade until the CCI 20 drops below plus 100. We will continue to follow the result of this trade simulation in next week's commentary. Industry rotation the last 2 weeks. All of the top 5 industries are positive, and 4 of the bottom 5 are negative. Summary: gold and silver, oil services, oil, and S&P retail on top. REITs and disk drives on the bottom. Bullish, S&P retail has entered the top 5. Bearish, gold and silver continues in the top 5. REITs and disk drives have entered the bottom 5. Comp tech, disk drives, computer hardware, and semis have left the top 5. Oil services has left the bottom 5 and entered the top 5. Focus this week from www.zerohedge.com. How will tax reform affect you? Find out with this interactive website. The following are some key points. Will you be paying U.S. taxes in 2018? If so, this interactive model created by JPM is for you. The Tax Cuts and Jobs Act, which was signed into law by Donald Trump this week, is projected to reduce individual tax payments by over $1 trillion over the next 10 years, more than triple the tax cut impact on businesses and corporations. However, the impact on individual taxpayers will differ and depends on their income and deduction characteristics. The bill entails changes to marginal tax rates, tax bracket levels, itemized deductions, the child tax credit, and the alternative minimum tax, and creates a new approach to pass-through entity taxation. To allow everyday Americans from all walks of life, as well as certain subsets of Wall Street workers, to estimate the impact of the TJCA on their tax burden, J.P. Morgan developed an interactive website to give you some sense for how the changes might impact your combined federal and state effective income tax rate. Simply choose from among the taxpayer types, which include salaried workers, hedge fund managers, retirees, private equity principals, trust beneficiaries, pass-through entity owners, pass-through entity investors, pass-through entity services, diversifieds, and whether your itemized deductions are high or low. If you are a pass-through entity owner or investor, you will need to choose whether the pass-through entity has high or low wage intensity. The chart will then display effective tax rates under the current system and under the TCJA across a range of total income, such as the one below. Click the View links for more information on the menu selections and to be taken to the interactive JPM website. As an added feature, the website will allow you to calculate the incentive for any given taxpayer type to move from a high tax state, 10% state income tax, 2% property tax, to a low state tax, no state income tax, 1% property tax. Thank you for watching this week's Santu Pirls Stock Market Commentary video featuring the proprietary bull-bear point and figure market breadth summary chart compiled by Donald Pearl, www.s2pmarketsignal.com. Hoping that you are enjoying a Merry Christmas weekend, that you are looking forward to a prosperous and productive 2018, and wishing you true success.